Okay, sorry about that. Right then. Now we only have 4 minutes left. Let me just bring that thing up. I'm not going to talk about it again, but let's just bring this. So that's my US30, that's my NASDAQ. I'm going to put them on the 1 minute. Now I'm not going to trade this straight away from here on US30 because that's the one that's moving. But at the open we will find out if NASDAQ will move or whichever. So whichever moves. I mean, today I don't have a good incentive to actually trade now at the open because I've already taken this. So when I've hit my daily and session target, I'm kind of done. Earlier I traded the DAX on the 1 minute chart. So I actually, this is the proper feed that cuts off, so it doesn't have that extra bits. I like this feed. So the open, basically market moved pre-market quite a lot. Let me just bring that. It's going to be somewhere here from Owanda. Okay, it's going to be German 30 EUR, I think so. DAX. Yeah, that's the one I like. So we'll add this to this one as well. So you have the 24-hour feed. That's how we saw it on MT4. So that's the Frankfurt Open. Around here, DAX will have a higher spread, and I don't trade it. But that was the first beautiful pullback. You have the dark bars on the AO. Gator is open, clean pullback. You could go long here, long there, get out here, and then just a minute before the open, you had an opportunity to go long here. Almost probably you would get out. I did not take this today because I wasn't, first day I want to have something perfect. Then it pulled back, but the candles were too big. Anyway, let's just focus on these two now because we have the open. Come in. Come on. Okay, last 15 seconds, both on M1. And so if I set a pending order here, this would be a breakout short into a setup one. But with indices, you don't want to do that. They can gyrate up and down. On DAX, I do it right at the open. As we can see, US30 is dropping. It's continuing. So what it's done is that it has done a PC over here and then it dropped, whereas NASDAQ is going up. So I'll wait for 1 minute for these candles to close. And like I said, because I did my short over there, I don't have much incentive. But US30, when it starts to drop, it can drop a long way. However, I think after the first 15-20 minutes, I will redo this bit, what I was trying to explain earlier that you didn't hear. If you're interested, let me know. Yeah, this ADP thing. Because it's going to be NFP and it's OPEC meetings all day as well, so there's going to be lots of going up and down. I like September. Oh, look at NASDAQ. Okay. So that means Apple must be flying. Yes, it is flying. So as soon as the Apple starts to go up, like I said, that was the setup one. You can see this, 3 up, 4 down. It's a beautiful setup one right at the open. You probably didn't hear me at the time. That's what I was pointing at, because I saw NASDAQ not going down, whereas US30 was going down. So that, and I know that Microsoft and them are being held. So if we go to the US30 list, now we'll see why is it dropping. So it's Pfizer that's actually taking the index down. Pfizer is dropping. A good candidate, it would have been a good candidate right at the open to actually short it. WBA, it had a 4% rise yesterday and it's gone up. IBM, actually I wanted to see my list. I'm keeping an eye on the DAX, the NASDAQ on the other screen, MT4. Meanwhile, I want to just check these gappers and movers pre-market. Right. I've taken a long on DAX, not DAX, on the NASDAQ. Let's just stop doing that scanning from there. And we go to the normal. I just bought it here. So I'm going to have my stop loss around here. And let's go US30. So US30 already dropped. It's recovering a bit. We'll see if it sets up. But right now, it's time for NASDAQ. And since I am long from here, my price is actually 15655. It's 10 points up. I can move my stop loss to break even, but I will keep it here for now. I'll wait for this candle to close. It's a very strong trend candle, so I can keep my stop loss here. If it comes down and hits it, it's not a problem. But if it prints another one up there, then that would mean that we could see some more strong moves up. There is a problem, however. And the problem is this. So this is the deeper pullback that I call when it comes all the way below the blue line. But as you can see, it's still a pullback. So later it started to go up, and the opportunity to go long was earlier available to me around 11 o'clock UK, which I did not take today because I've already seen this. On hourly, ideally what I want to see is that I want this to go up like something like this. When I see a day like this, then on a following day, I will have what we call the famous setup. This is that they could, people call it high tight flag or tight flag or something like this. So a very tight box with an open gaiter, and right at the open, it will fly. So I did not take it on the hourly, but I was actually trading the 5-minute chart, so took it. Right, so now we have gone into the territory of simply just, I will watch this because I'm long from here. So I'll just watch and see what every candle tells me on the 1-minute chart. If it just keeps going, yeah. On the ATM, I would just hit my candle trail. If this closes up there, then I will hit my candle trail. Right now I'm break even. So my stop loss is here. I do not mind if it comes down and, oh, nearly. It's a bit jumpy today. Let's check Apple again. Whoop. Whoopsie. Okay. So Apple is a lot easier to trade. So let me repeat that thing again. We see Apple is in an uptrend on the daily chart. Easy, easy, easy. We have longer term positions from here and here. And then I saw it yesterday the day before, a very strong move up, followed by an inside candle. This is what we call the Waltz pattern, where you have one candle is extremely strong trend candle followed by like a recovery day. These 2 days on the hourly chart will create that beautiful setup one, which is this. You have a 3 up, 4 down. So you have a gator open, then it goes and it funnels. So you can see that box, it funnels, and then at the open, it is supposed to go up. You take it long. I got stopped out of my NASDAQ position for break even, by the way. I will be looking for a pullback still. So based on that information, at the end of the first minute, if you saw a candle like this, I mean, this is not really a strong trend candle, but still, this is where I would go long. But I traded NASDAQ instead, which probably, that's what I do anyway. But if I were to trade the Apple, then it would be this. Okay, so now I have, because I've entered here, that's why I had to keep my stop loss tight. If this was clean and I had gotten in around here, then I would probably still be holding this position, or I would have taken half up there. Okay, I have hit the pending order. I don't like this wick. If this was a nice trend candle, then this would be very nice. But still, the momentum is up. The first 5 minutes is a trend candle. It's actually an extended one. We don't really like the extended one. And the next one is forming. So I will go long here. One more attempt to see if it is going to go up. My stop loss will be 15 points, and we will look for 20 to 30 points above here. Don't like this wick. Don't like this very strong trend candle. And don't like this wick, because this suggests that, you know, and now the wick has a double top. So, but now we have an inside candle. It's kind of a bearish one. The wicks are long, still in bullish mode. Let's look at US 30. So US 30, as usual, just gyration going on in the first 15-20 minutes. That's what it does in most cases. Going to NASDAQ. Okay, so the low is not broken here, so we are still in that consolidation. So this is really a pullback. So I will keep my pending order above there for now. I don't like these wicks. I mean, but that's why I want price to go up. I can go long here if I want to half my position, and then I will join half there, and that's what I will do. So boom, boom. Let's see if it breaks. This is very positive looking chart now. This entry from here, once it clears that level, this is where I can actually, you know, close half of it. If it gets to that level, that would be interesting. But chances are that it might fail here because of these wicks. And if it just comes down here, we'll close the position. This is what I call a B trap. I'm getting B trapped. It doesn't really matter if US 30 is going down or up. This year it's been like this. One goes up, the other one goes down. It just goes nuts. Problem though is that you know, beginner trader, as soon as this price starts to come down, they would get out of their positions, and then they would, if it went up there, they would all be upset why they got out, and then they'll get in there and market would come down, that kind of thing. We don't want to do that. We just hang on to it. We know the stop loss is here. Just, yeah, it's not beautiful for now because I have too many wicks, right? There's one wick here, then you have a strong trend, bear trend, and then you have wicks here. So it's still in consolidation. We did not see a strong break. And the US30, on the other hand, if it breaks this level and then pulls back to it, I might take a trade on this. Let's have a look at DAX. Whoops. Okay. Oh, well, that's a miss. Now this is a clean chart. Look at this. This was 20 minutes before the open. So all I had to do was just take it here and then sustain this sideways. This is almost like that cup and handle thing. This happens quite a lot of time. You see this box pattern. When you see 3 or 4 candles strong move, comes to the green line, comes back, hits this level, creates a new level, and then without retesting this high, actually stops lower than that and starts going down. Literally that famous kind of a cup and handle situation. And this box setup is actually pretty good for that. I can actually draw it. Let's do it that way. Where is my arc? Yes, boys. 1. And that's these drawings and stuff. I use this to distract myself from messing positions like this. You see, this needs a bit of patience, right? Because if you just keep looking at the wicks, and you can talk yourself out of it. This could be a nice and easy 2% trade if it goes up there. So now it's hitting that particular level. Over here I can hit hit out some profit, and so that I can bring my stop loss to break even after it hits that high. After it clears it, then I can bring my stop loss to break even. Right now I'm just going to take some profits. Very, very tiny 5-point profit. Let's look at Apple. So Apple is consolidating as well. Look at that. Microsoft. Okay, what else is moving? Zoom is recovering. Zoom had a really bad time. I think it dropped on earnings. Even though it was positive, it came down. Market can do weird things. I'm not interested in the why. I'm just interested in what's happened. This has happened. So Apple up, mRNA up, TTW, Nvidia. I mean, these are really great trades. Hey, look at US. Yeah. There we go. I have hit my 2-hour target. This is pretty good. I like what I see. So now I will just trail the candles. This trade that you saw, just what you see here, this is it, and that's my 2R. See, well, not quite, because you have to count the spread as well. So 1.72, and here we go. All I'm doing now is trailing. So stop loss is here now. Goes above there. That would be 20-point profit. There we go. So that's now 2R. That's 2R done. That is 2R done. yeah, let it run. I'm still holding. I have a hard target at 15690, and it's hit that. So now I'm 75% out. I'm just running just a small position and trailing candles. I will not trail the 10 EMA or the, this is similar to this. If you don't like indicators, just put this on. 10, 20, 100, wait for this momentum breakout, and pull back to 10 EMA, get in here or get in here, and then let it run for 2% or follow the 10 EMA. So in this case, I will not follow the 10 EMA now because price has gone too far from it. So, and we have 1, 2, 3, 4, 5, 6, 7, 8, 9, bullish candles. Easy stuff. You just trail the candles. And I have a script for it, atm4-exe.com. You can get that. Steve's a wonderful guy, his website, and I use his script on my MT4 all the time. I've been using it all these years. So I just, there's a button in that called T candle, and I will just do that. Oh, so I have hit a plus 28 on my MT4, and my target was there. So that's a 2R, 2% trade done and dusted, and that's all I want. Now this can go and keep going for the rest of the afternoon and stuff. What I want is that 2%. If I get it, I got it. Today has been a lovely day because if we go to let's do that. Okay, bring it here as I posted earlier. So on the US30, I took a trade here and took a 2% position. So that was great. And then as you saw, I display both of them. I look at US30 and NASDAQ at the open, analyzing the situation, keeping in mind what I have analyzed on the hourly chart, right? What I know. So let me now repeat myself what I did earlier. Oh, hold on. Let's go to the other chart. This one doesn't have those drawings. Oh no. Don't tell me you guys can't hear me. Can you hear me? Yes, you can. Thank you. Oh, I hope you enjoyed the trade. This is, I mean, it turned out to be a good day because that's exactly just what I want. It's rather simple. I mean, yeah, not that simple, but it is simple. I mean, if you try it, like if you take 500 trades, I'm short in soy F from one. Oh, okay. Is that future market? Are you talking about soy? Ah. Yeah, that's nice. It's not as strongly. Is this the one that you're talking about, right, Sniper? Soy futures. Yeah. I do look at the futures market. I have a list for it. All the soft. There you go. Soybean futures. This is a setup one. If I was going to trade it, I would be short from here, and I would still be short. And if I wasn't short anywhere there, then this is definitely a nice pullback. If it just clears these levels, I mean, let's go to the weekly. I look at these things on the weekly chart, to be honest, just on Sunday. So it had a really strong move up, and what I see is actually a trend change on this. So I wouldn't call it a wave 4 now. Why? Because I see very strong bearish, trend candles followed by this almost a cup and handle kind of situation happening, right? So if it breaks from here, there's a lot of down movement available on this. So you're still stuck with those levels, or wait for it. Let's see if it breaks. It could actually really shoot down. I did trade sugar. I traded this pullback. It was very simple, easy setup, exactly like I traded the NASDAQ M1. Pulls back, so you have a strong move up. Not really strong, but it's a breakout. It's the highest high of all this to the left. Pulls back with open gator, go long, 2-hour position, I'm out. And there was another one I took on wheat as well. Coffee, as you can see, this was a nice setup one. I missed it, but then it extended too much. So when it extends like that, I don't look for pullbacks. This could have been another long on that. I don't trade this. I would trade that. Wheat, yeah, wheat, I took exactly the similar thing. I looked for this momentum breakout. As you can see, bullish, 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 pulls back, open gator, fresh new peak of AO and dark bars. This is what I call the hunt method. I went long here. I got out for 1.25 R. I did not wait through this. If I did, then I would have hit my 2-hour position, but this was good as well. But I like futures. I started trading back in 2006 when I first traded. It was futures. Those bastards cost me £450 a month. I used to pay for the signals. I mean, I had no idea what I was doing, but it was futures. And yeah. Okay, let's go back to I'll just explain what I wanted to explain earlier. Why I was short on the US30 and the sound wasn't recorded. Are the pullbacks the strategy you usually use? Oh, yes. Basically, I use what I call the setup one strategy. So the question suggests that you probably are not familiar with the channel and stuff. So I've explained it in that. But anyway, what I'm looking for is my first priority is that I want to see a setup like this. Actually, I'll bring my I'll bring a better example. Like I took the Australian dollar yesterday. I went long on this, right? And I was trying to explain this earlier. So if you look at this, that's my setup. Some people will call it the flag or something like that. So it was a flag actually here, not necessarily here, but this is like that 2 pullback. I call this the box funnel. So I want the momentum breakout. As you can see, that same concept, like, you know, what we saw on the NASDAQ M1 chart. What we saw was a strong breakout and then a pullback. But in this case, the pullback will be deeper. So you'll see this strong move up and then price will start going sideways. The box will go tight and that will put what Bill Williams will call gator sleeping. Gator sleeping literally means that your 3 of these MAs are inside this box. So that means price is really tight in consolidation. Even if you don't have that and you just look at price, let's suppose we just look at price like so, then the idea would be simple. Okay, you want some strong breakout, and the strong breakout happens. After that, you want price to consolidate, go sideways, and then it turns into a breakout strategy. But this is not a classic breakout. Why? Because this is a breakout in the direction of the trend. So this is a deeper pullback. Whenever you see something like this on your trading time frame, if you go to the 5 times higher time frame, it's literally a simple pullback. So basically, I trade a pullback on 2 different time frames, and my ideal setup is this. So I want a peak on the AO, and then I want the AO come back to the 0 line. I want to have at least 1 red bar. As you can see here, it's just crossed. So basically, it means that the 5 has crossed below the 34 SMA, right? Or the green line has touched or crossed the red line. That's the minimum I want. And then I want this tight box. Why I want tight box is because I would go long there. So if price was to go below this box, this is a 100% guarantee that I'm wrong. And that's why I would go long there, stop loss here, and I will put my target point at 2R, which would be 2% in this case, if I risk 1%. So it's there, and then I would just let it run. Now in this case, it went up, came down, stopped me out for break even, because what I do is that if it goes 1 hour in my favor, I would either close half and then leave stop loss where it was if I wanted to actually see, pursue a very strong move, if I was expecting that. If I wasn't expecting that, then what I'll do is that I would bring stop loss to break even at 1 hour, and I would wait for the 2 hour to be hit. In this case, my stop loss was hit, which was break even, and today it went on and hit my 2 hour target. Now I was a bit lazy today, otherwise I would have, if I'd gotten up early and got sat down, I would have taken this, and now I would have hit my target point. However, I did take this trade. So bringing, to your question, I take pullbacks of the 5 times higher time frame, which turns into a setup one. This is what I call a setup one. And after trading lots and lots of setup ones, like suppose you trade this setup, let's say 100 times or 200 times, right? So this is what I was doing. I was doing it on euro dollar M1, M5, and I was taking all of these setups. Then suppose you do this exercise, plot your trades on your MT4. Let's suppose you take all your trades on the 1 minute chart. Put those trades there, and then you switch to 5 minute chart and see how they look like on the 5 minute chart. I found out, so if you look at, I took this trade on the hourly chart, right, over here. If we look at it on the 4 hour chart, approximately, right, it's a pullback. I found out that basically whenever Gator sleeps and then it opens, when there's a breakout and it pulls back to open Gator, that first pullback, that's actually setup one. So then what I started doing is that if I believe in this, that you have to have one time frame of trading. If you trade on multiple time frames, you can analyze multiple time frames, that's fine. But if I trade on multiple time frames, everything goes haywire. So I don't want to do that. So in this case, we see 3 candles, strong momentum breakout, followed by 4 candles of consolidation. This ideally would create this type of setup one on the 15 minute or the 5 minute chart. Let's go to the 15 minute chart. I'll delete that and I'll mark this over here. This is that same pattern. See, this pattern is this pattern, but fractal geometrically. It's going to be on a lower time frame. So if we go to the 5 minute chart, what do we see? We see the exact same pattern. We have the 3 up, 4 down. I've tested this pattern on thousands of charts manually, and I've hired statisticians and stuff, guys, to actually test it, come up with a Python code and formula to do it. And this has a robust edge. So if you trade 20 of these, there's a very high probability that you will get 5 to 10 hour profits at the end of 20 trades. That's the edge of this setup one. Simply by going long here, stop loss here, and 2 hour target. That's it. So that's that setup. If we go to the 10 minute chart, I think it's still going to look beautiful. Yeah. So that's it. Goes up, comes down. But I don't trade the 5 minute chart or anything like that. On Forex, I would just look at the hourly chart. If I take this here, then this can be my add-on. If I see that it goes up and I bring my stop loss to break even, I can add on here and then have my stop loss here. In that case, I will increase my profits. If I haven't taken this, then I will take this as a pullback entry, and that's what I did today. So I went long there, stop loss here, and because as you saw on the 5 minute chart, I would treat it the same way. So over here, I think it was just an hour ago when it hit my 2 hour target. So there you go. That's that. I don't care where it goes from here now because it's hit 2 hour. So that's the answer to your questions. Are the pullbacks the strategy you usually use? So yeah, you can call it pullbacks. So this is a clear, the 3 to 4 candle pullback. This is my favorite. But what people would normally make a mistake on this is that they would trade these pullbacks inside sideways markets. Remember, pullback, from my perspective, Pullback is a mechanism to join the trend. So before you think pullback entry, I would say, I want to see if it's trending. In this case, it was trending. It's the highest high in this trend. So when it pulls back about, 25 to 50%, I would take that trade any day. Or I would take it on the 15-minute chart. It's a lot easier. Right, so before I go, I'm still here for another half an hour, but I've hit my targets. I'm not trading anything, so we will explain this, why I was talking about this. So I've noticed that on US30, I've been watching it for years, but especially the last few months, it would form this series of barcode, right? White, black days before it breaks out of it. So this is where I last traded this formation. And before that, I traded on this formation. What you do is that you will see that market it's not able to break that. So if you look at it on the hourly chart, right, this is where it started. So on this day, you have a setup one breakout, goes up there, creates what we call the fruit, a divergent candle, or you can call it a pin bar, right? This is not where you would go short because you don't know if it's the end, because it looks like a pullback over here. Goes down, comes back to it. The next day, you have a sell signal because there's a double top. It's a daily box high. Can't break it. You have a strong pin bar. You go short. Boom. I didn't take that. I think I was still in holiday mode. Then you have the third attempt and the fourth attempt within the same day. Didn't trade that. This is not clean for me. You see, there's a very strong move up. But in this case, which I traded yesterday, price hit this level. So you see, this is a range, right? You want to trade the range highs and the range lows, but I wouldn't trade the range lows in this occasion. I won't go long. Why? Because the low is not defined. As you can see, there are like, different lows. You can't really pick any of them to go long. But if you look at the highs, you have 1, 2, 3, 4, 5. That's a fifth day. And on this, you have a very strong confirmation candle as well. So you have a very strong rejection. When short here, stop loss up there, just exit towards the end of the day. Nearly gave it all back on this one. So if you have all that assessment and knowledge on you, and then you come to trading the next day, you know what's happening. It comes back to it. Almost immediately at the London Open, not the end of London Open, 2 hours after London Open, this is 10 o'clock, we have a strong trend candle. And for this, I use the 5-minute chart. This is what I call the Waltz pattern. So for the Waltz pattern, you'll have 1 or 2 trend candles like this, and then they will be followed by a doji or an inside candle, a very small one. I have seen myself go short. Many occasions I would go short on this doji and have my stop loss above the range high and then just pursue these levels to the left. So on this occasion, as you can see, boom, correctly. But my trade on this was like so. On the 5-minute chart, again, same setup one, as you can see, peak here. Let me just use this. This is what I saw. So overnight, we have a setup one long, goes up to that area, loses momentum, gives me that trend change. And I talked about this in my chat room today. When you have this series of stepping up boxes and then price breaks below it and then comes back to it, gator sleeps and creates a new box low, that's your first trend change. So, but I don't trade on this because I don't like to trade against the purple dotted line, right? I want to see this peak of AO and then cross of zero line here, which happened over here. And then we have this very strong around pre-market, US pre-market after 1 o'clock UK, you have a strong outside bearish candle and the box. I just went short and the rest is history. I mean, I could have just made a lot more, but that's not my style. I'll go for 2R. If I get my 2R, I'm happy. That's all we need. Righty. So, oh yeah, let's look at that DAX that I was talking about. So here and here. And this is what I call the B trap. So why is it a B trap? Two things. I can see that price has moved. I mean, apart from the fact that I have two divergences, right? In a very strong move down. So the trend has to end somewhere. And there's a very strong move up, bullish prices, and then ABC correction. So I call this the B trap because of this. If this is 1 and this is 2, then this will have an A. Oh, let's start again. This will have an A, B, and a C. And why do we call it B trap? Because sometimes when the pullback goes up, this could be A, B, and C. This itself could be a B. So this, from that point of view, becomes a B trap. But in this case, it's actually not a B trap. It's actually a PC. What's a PC? Principal C. Principal C means that when you see an impulsive move and then there's a two-leg correction, which is the classic two-leg correction, this C wave down will actually poke out of a series of boxes. So now we have a new higher high and a new higher low, and then price continues to go up. So that's the trend change over here. Many times I would actually put a limit buy order here with stop loss below this. So I will get long, and if it comes and breaks this level, then I'm obviously wrong because my analysis was wrong. Otherwise, we'll just go long. But that's not my main thing. My main is that setup one in the pullback. This is my setup. At the open, boom, breakout, pullback, first pullback. So this is what we call the Monarch Pattern. It's like the first cross of the zero line out of consolidation, breaks out, creates a new peak of AO, then dark bars, which actually means momentum breakout, pullback, and boom. I'll do it on anything, on any time frame. It works. Two caveats. If this first phase is too high, then in that case you will miss. Like if you didn't time this over here, then you would miss this move, because then over here I won't be looking for a pullback. I don't want this AO or the price to be going too far up. NASDAQ did it beautifully. It went 2 to 3 candles and then pulled back nicely. And I'll share this. I am never sure, and I've checked it with many traders who trade for a living and stuff. You will never ever be sure about a trade. And if you are sure, there's something wrong. Because how can you be sure? Nobody can be sure. You can only be sure about, is this a good setup or not? Should I take it or not? That's the old surety. Then after that, if you start thinking about whether it's going to hit my target or not, and then you want to be 100% sure about that, then you're mistaken. You can't be sure. So you take these trades. I did not announce in my chat room that I was live. Sorry guys, I did not alert you. This is a stream after a very long time. Okay, after being live for an hour and a half, I just told my team that I'm live. They're probably all gone by now. Okay, so what we see now is, we see a 3 up and a 4 down, but now it's the box height. I don't like it. It's too big. Because to get my 2R, I will have to have my stop loss over here. And that means that I would need this much movement, or not this, more than that, which is 60 points in my favor. I mean, if you squeeze it, it looks beautiful, but we don't want big boxes. We want tight boxes. If we look at it on the 5-minute chart, again, it's a pullback. And in that case, actually, you would be triggered long. But as I said, for my pullback, I don't like these wicks in between. But then again, it's an inside candle. So on the 5-minute chart, if I were pursuing this, I could easily be long here with stop loss here. Still, there's a chance of, you know, ABC. Can never be sure, but it can work. It's a nice setup one. Now, if it goes sideways around here, creates a box, tighter box, then I might take it. What's US30 doing? Okay, so US30 did not set up with a tight stop loss, but it's actually, it broke the high of the box and then it came down. So I look at this like so. See, a very tall box. A tall box, I don't like tall boxes. If I will trade them, I would actually trade it long from here and get out there, and then when I have a bearish candle, I would go short here, targeting the lows over here. So if the box is tight, I can trade inside it. Sorry, if the box is tall. If the box is tight, then I would trade the breakout of it using this setup. Let's look at the hot markets. Beautiful, beautiful move. Yesterday I traded BBIG and I traded towards the close of it. Over here it was a nice setup one. Boom. Skills was on my list, but I don't really short stuff. So that's another one of the setups. You can see at the open breakout and ABC pullback. And this is what we call the PC setup, where you see the box low. So with an open gator, it comes down and then you have this, well, in this case, it's not really a strong bullish candle or rejection one, but it's also a doji. So if not here, then at the end of this candle, I would go long and my stop loss would be here. If not this, then the break of that box and boom. Let's see what AMC is doing. So AMC is down, up, down. I wouldn't have traded this. Apple setup one long. Yes. If I was focused on this, I am long here. I'm definitely long here. If I go long there, my stop loss will be below this box. And because there's these levels, I actually can have my stop loss here. And I would see what it does at these levels. Is it going to stop and turn into a trading range? Well, it actually is a trading range already. Or is it going to break out? But most probably, it's going to be a breakout. See? This is another pattern I was talking about earlier. This is what I call the Waltz pattern. We have a strong trend candle. Why is this a trend candle? There are literally no wicks. Almost no wicks. Mostly body, followed by an inside or a doji, but a very small candle, which translates into this. I think I talked about this. And what do we see? The same setup. The same setup that I've been showing, the setup one. So at the open, you go long. If you don't go long, you go to the 5-minute chart or the 1-minute chart. And then you can trade at the close of the first 1-minute candle over here or above it. If you didn't get that, then you wait for the setup one on the 1-minute chart, which is this. So I'll be long at 154.44. Now it's hit up there, so I will, take 25% off mentally, or rather even physically put stop loss at the entry level, because I'm looking for that breakout. If it doesn't break, we're not interested. NEO. Okay, NEO has been going up. up and down, too much pullback, and that would just put me off this chart. Oh yeah, WFC was just going down. This is another one of the setups. So if you are following this chart, let's suppose you look at the daily and you have some reason. So what is it? On the daily, we see two strong trend candles. This would be the third day play. So here would be the second day play. This would be the third day play. But on this, if you just consider this as the strong breakout mode, you know, if you run the scanners, 4% up and 4% down, this would come on that scanner. Let's see. What was not that. Let's count. Let's find out how much was it. So that was minus 3.76, so probably slightly less than that. But if you ran a let's say $1, because it's well, it wouldn't have, but it was almost a 4%. Suppose it was a yesterday's close, and then the pre-market, it has to go sideways and then break out at the open. So it did break out at the open. On the 1 minute chart, you can see broke out, pulls back. What is it? It's exactly the same setup that I traded on the NASDAQ, but the opposite. So you have a breakout, pull back to previous levels, you go short here, and then follow the green line if you don't go for a 2%. If you follow the green line, you either exit it here. I want to exit here. If I held it all the way there and it closes above the green line, my stop loss would be above somewhere here, above these boxes. And now I would definitely be out around here. Pretty good trade. This is my method, whether it's a daily chart, whether it's a M1, M5. Look at that, DD. DD has been hot for all this time. Day traders have been trading this as a Chinese stock. So again, you have a breakout, pullback. You can go long here or long up there on the box. And then if it just keeps going smoothly like this, as you can see, none of the candles have broken the low. So you just trail the candles. You probably get out here. If not there, then below the box. And now you don't want to touch it. AMD. AMD has been a beautiful trade on the daily chart. Look at this. What do you see? Do you see that same setup on the daily chart or not? Oh, is my stream buffering? There's a video on my channel about my setup screener. It's somewhere here like this. So if I trade for, let's suppose if I want to just trade stocks, all I want to do is I want to just run this scanner here. And what is this scanner? It looks for pre-market -5 or +5%. I'm mostly focused on the +5% stocks. I would consider a pre-market gap, so that would become a gap and go. But mostly I want the 5% gappers or 5% movers, right? So if they move 5% or something, they would come on this screen here. So let's suppose today we have these. But if you want to just trade the the famous stocks that have been hot those days, just come to TradingView and hit this button, this one here, and then select volume gainers. And so I have one on volume gainers, the other ones I have percentage gap gainers. You can access this from here as well. No, not that. Let's come here. Go to, I'm using the app at the moment. You can use the website as well. I'm using the TradingView app. So go to screeners. You can find it here as well. These are mine, but if you go to their screeners, where did it go? These are my screeners. So volume leaders, there you go. So it'll give you all of those. and then you can see which ones are at the top. So these are the names that I've been trading these days. I've been watching it, you know. These are the gappers, but I like this. I would just go here. If you look at this, it will pick most of the stocks that have been traded. So if your account is small, then you want to, you know, restrict yourself to these kind of stocks, you know, $2, $5, up to $20. Otherwise, if you have more money, then you can trade these bigger stocks as well. So Zila, this one, Ford, DD, AMD, Baba, Palantir, Support. This has been hot these days. And if you follow these things like on a daily basis, you will have a fairly good idea which ones are moving these days. Like, for example, we know this is a meme stock. You know, AMC has been going. We have a position from here on AMC, still long. So there's another pullback. We added to it. We have a position on Apple on this pullback here, and then added on there, and then added on there. So if you know that the daily chart is like this, then you know that it's going to be, and it's hot, it's bringing momentum. You know, you will trade it on the 1 minute and the 5 minute charts. So Neo had some stuff going on recently, so it was hot today. It's one of the stocks. If you have it on your chart, on your watch list, you know, you'll end up seeing it. So BBIG was very hot yesterday. Traded there. It stayed hot in the evening as well, and today it broke out. Skilled was on the list. EDU. That's a beautiful ABC pattern that I explained. Love this one. See how much you could have made on this one. Look, long position. So if you took the PC entry, I mean, if you go to my website itradeems.net, or the /blog, or just search the YouTube channel, you will find all of these things in there that I explained. So this was a 3.5, right? All you needed was, you know, like you could have traded this with $1,000 as well. And the growth is crazy, you know, on these smaller stocks. Sometimes they just fly. Okay. The advantage of stocks or indices, I don't think there is a particular advantage. Both can be done. Both have their pluses and minuses. So if you trade an index, right? An index is, there's not much that you can do with an index chart. It's very, very technical. So let's suppose we are on NASDAQ. So when it broke out and pulled back, this was actually indicating that Apple and quite a few more were actually moving or leading the index. And then it pulls back. So it's quite technical. You can't really do much about it. You don't have to worry about volume or anything like that. So from that point of view, if you like that type of trading, then this is for you. But if you suppose in the US, what you will do is that you will trade the index futures or the ETF, right, to achieve the same. So some people like to do the futures market. They trade that. But if you wanted to trade stocks and you didn't have enough money, let's suppose they need at least $25,000 for the pattern day trader rule. They can't trade more than 3 times. If you have less than $25,000, you can't trade more than 3 times in a week or something like that. So let's suppose you need at least 25,000, or you want to take 1 or 2 trades on the pattern day trader thing, or you want to go and open an offshore account, and then you have only $5,000 or $10,000 account. Then stocks would be a lot more appealing to you, because then you can go and find stocks like these ones, the one that pop up on like this. Right, this one you would have to trade pre-market. So this is gap and go. That's one of the strategies. Gap and go fits with this style as well, because that gap, see the pre-market gap, it tells you that this stock is hot. But this one is too high. So obviously, if you have less money, you want to actually run a scanner for, you know, find stocks between $2 and $10, because you'll be able to buy them. If they're expensive, you can't really buy them. Thanks, Sniper. I am planning to actually, you know, stream this stuff almost every day, hopefully. But now my throat is dry. My job's done. It's 3:30. So we'll call it a day. I'm literally not going to trade after this anyway. We had one trade. Let's just do a little recap. This morning, in the morning, I would trade the DAX. So when I got to my screen at 8 o'clock, this is London Open, I can see that it's already had moved. And just like what US30 did, it kind of did this strong gyrations. I did not trade this. I did not like it. If you look at it from the price action point of view, let's suppose, what you saw was a channel which was converging on itself. And I saw this and I thought, you know, I was calling it a tilted, an upward tilted range instead of a trend. Because you see high, 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 and high, and all of this was so close to each other. So it wasn't really going up, but underneath it, it was stepping up, and then it squeezed itself. As you can see, the squeeze happened here, and this was a first indication to actually go short. So it moved down, pulled back. One of my friends in the chat room, she went short here, took a nice trade. I waited and actually went short here. I went short there, and my 2-hour target was hit, and that's it. And I thought, okay, that's my job done. All of this time I was in the gym, came back, have lunch, and then at lunchtime what I do is that I then display, I look at US30 and the NASDAQ, and then I choose one, whichever moves. So as you can see today, US30 had already done that stuff, and I had this other trade on it already. So that was 4R for me already. And then I thought, okay, let's have a look. If I see a very nice setup, then I will take it. And it did actually happen. It was a very nice setup. Nice clean breakout, pull back, boom, 2R, done. So today has been a very good day, a beautiful start to the month. So it's only 2 people who joined today. That's very good. Thank you very much. I hope to see you again, and most probably back here tomorrow. See ya. Bye now. And now I need to figure out how to stop it.